Welcome back to this video. Fear of execution. Most of the traders are battling with fear of execution. Personally, it has not been so much a long time ago. I think a month ago, I have been literally struggling with executing trades. I could do my analysis on the chart. I could identify a point of entry. I set my order limit. On setting the order limit, I'll wait for the order limit to be triggered. As the market is nearing my entry order limit point, that's when something just feels on. I get convinced that this trade is not working. Yeah. Before my order limit is triggered, I close it. Or it even go to worse point whereby after setting the order limit, I'm staring at the chart, waiting for it to be triggered. All of these ideas come to my mind, like conflicting ideas, conflicting information, that this setup here is not going to work. You see, I'm in two crossroads right here. Yeah, this setup is gonna work. This setup is not gonna work. Right now, to confirm now to confirm myself whether I'm right or wrong, I usually left the order limit. Okay, if I don't close the order limit before it's triggered, then I wait for the order limit to be triggered to confirm whether I'm right or wrong. You see, when the order limit is exactly is immediately triggered, then I go to my account starts turning red, right? I start making some loss there. Then that is when I get convinced that I'm now 100% convinced that this trade here is not going to work. Immediately, I tap the close button. That was literally me a few months ago. That was exactly what I'm doing, what I did. I don't know if there is anyone also who is struggling to execute or closes the trades before their take profits or even the stop losses are hit. One thing I can be open on is that, see, when I did set my order limits, I never wanted to go negative on my account, right? I always wanted, when I enter a trade, immediately I enter a trade, then that trade moves in my direction. Okay, let's talk. Okay, let me just do with this illustration. This here was a chart for Euro USD on the 1 hour time frame. This was downloaded on November 2023 on the 15th, right? So with our bearish model, which is just drawn here, this was downloaded on TradingView. We needed a sweep of liquid right here, right? With this first leg, the first break of structure, we need this first break of structure. Then its lower low, we said this is where we set our sell order to potentially smash this high, this lower lows. But you can always take partials along this leg right here, right? Stop because I said take profits are not usually a guarantee that they are going to be to hit our targets, right? For the market to hit our target, much verse of somewhere there to take us on the negative on the road, the drawdown. So we had a sweep of liquidity right here. We had the first leg coming down here, then a break of structure. Break this structure, this low, this where we're supposed to sell or sell order. Set your sell order there to target these high highs, to target these lower lows. And I said for this setup to be high quality, there should be a market structure shift, and we can just see market structure shift here, giving us another additional confluent. This lower low is likely to be taken. You can see it being smashed, and as we were rallying down here, right, we had a sweep of liquidity here, rally down first leg, get another break of structure right here. With this first break of structure, you can see after this lower low was smashed, the market came back, and then again, boom, we sold off here. We roll this market here to a tight channel. That is about the setup, right? And I remember during those days when I could set a sell order here, I didn't want even this market to even I don't know how was I expecting my order limit to be triggered if I didn't even wanted the market to I think it's called drawdown, yeah. I didn't want it even to get on any drawdown, yeah. During the I never had like it was another maybe reason why I was so much I had a lot of fear because I never had a model to trust, yeah. Even with this model when I started using it, I did close to most of the trades without my stop loss being hit. Because this is where we said after this sweep of liquidity right here, this is the strongest high that was created. This is where we should keep our stop loss. This high here over here. That's also considering the broker spread, right? But see, market getting on the drawdowns, it was a little bit crazy, man. It was crazy, yeah. It was crazy. All what I wanted was just a sniper, like not even a sniper, no drawdown, just trigger, boom. We are on the blue, on the green, so blue or green, yeah? The account turning green. It was a little bit crazy. This was just fear of the good. Then I came to learn later that when you fear losing, because fear of execution literally means that you fear to lose, right? Because if you are confident that your setup is going to work, it is going to be to win, to give you a win. That's not a trader mindset, by the way. If you're convinced that this trade is going to give you a win, a trader's mindset, a consistent profitable trader think like this, that this is an age that I've developed, right? This is an age that I trust. I have confidence in it, and if it works 90%, then it means for any setup that will that will print out, right? My work is just to execute. When I hit a take profit, then I'm cool. Thank you. I thank God for that. I take my profits. But when I lose, it doesn't mean that my age is not working. It is just a normal inadequacy of your age. The 10% out of the 100% when it doesn't work. Then the best way, if that trade doesn't work, then you go. Then I go back. Let me talk about myself. I go back. Watch that trade. The reason why it never worked. Maybe I can draw some pattern on these losses, right? Maybe the next time I see the setup, in the market, then I will not now execute that setup, right? This I'm trying to refine an entry, to refine the age when it doesn't when it works and when it doesn't work. Just as simple as that. So when someone fears execution, it just means that you fear of losing. You don't want to accept a loss. You don't want to accept the natural philosophy of trading that losses are inevitable. There will always be losses there. If someone feels losing, then the only way to deal with this, with the fear of losing, is to execute. Yeah, to execute. If you fear losing, if you fear execution, it means you fear losing. And if you are losing, okay, if you fear executing, the only way to deal with that, because no matter what, we have to execute to be profitable in this industry. If you fear executing, then it means there is no other way around. You have to execute, right? So you fear execution because you fear losing, right? Then that translates logically to, if you fear now losing, then you have to execute first thing. Number two is that you lose in amounts you're willing to risk, right? This is one idea of redefining your risk. Then you predefine your risk. Your account is like $100, right? I will be risking 2% of my account in every setup. 2%, that's $2. In every setup that prints of my age, I risk $2. Lose in amount. If that trade turned out to be a lose, then you're comfortable with it. Amount that you're willing to lose. Simple as that. Because you will only get freaked out if you execute and lose amounts that you didn't intend to lose. That's when you will get freaked out, right? You're not comfortable with it. Yeah, you'll get immobilized. That's an aspect. Okay, you attract your fears, right? See, fear is something very, 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 very. It's something very, very funny, yeah? Right? If you're afraid of being wrong, this aspect of that you attract your fears. See, if you're afraid of being wrong, normally fear will act upon your perception, right here. After acting on your perception, okay, if fear acts on your perception, your perception of something, yeah? Fear acts on your perception, causing us to do exactly what ends us ends up making us being wrong. Yeah, if you are afraid of losing, if we fear losing, right? The same fear will act on our position, making us do exactly what ends up making us losers to lose. See, when you fear, these are just ideas from Mark Douglas, that when you fear, when you are fearful, no other possibilities exist. You can't perceive other possibilities or act on them properly, even if you did manage to perceive them, because fear is immobilizing. Physically, it causes us to freeze or run. Mentally, it causes us to narrow our focus of attention to the object of our fear. This means that our thoughts about other possibilities as well as available information from the market get blocked. Yeah? Next, you won't think all about the rational things you have learned about the markets until you are no longer afraid and the event is over. It's very funny. You see, when you fear, like, okay, let's say, let's just market, right? When you fear, you're afraid of losing, right? See, all the information that you're supposed to take your trade here, right? You're supposed to follow this model, gets blocked totally, right? Now, when this market comes here, this place, and sweeps this first break of structures high, and it rallies and hits this take profit, or even it's around here, right? That is when we start now to be rational. We start now to say we start now to think rationally that this is the model that we are supposed to follow, and it's just printed. But before that, when we are afraid, nothing was clear on our minds. The last thing it says, then you will think to yourself, I knew that. Why didn't I think of it then? Or why couldn't I have acted on it then? That is it. That's where regret comes in. Why? Then you start to hate yourself. Right? You hate yourself. But it's not that you. It all came about with being fearful of losing. Staring at the charts. This is the worst thing that I always made. Staring at the charts, right? Staring at the charts. Staring at the charts. Usually, when you're fearful, right? You stare at the charts. Okay, you're following your model. It is a bearish version of the standard trading model. Yes, right? Like this. You set your order limit right here. You did your analysis, sweep of liquidity, first break of structure was very clear. Then you set your sell order right here. Naturally, you will expect this lower loss to be taken. But because of staring at the charts, when this move is going to take this to trigger your order, all forms of ideas, all forms many to convince you that this trade is not going to work will come into you. You'll even be watching at the way the bullish big candles, big momentum are forming. then you feel like, no, this one is a suicide. Yeah, then you decide to close off the trade. Or the worst thing, as I said earlier on, I could wait for my order, okay, even to be triggered. Then when my count turns red for about a minute, boom, I close with a loss. Remember, this guy is not taking this high, right? Only after closing that trade is when now the market will now rally smoothly and take a profit and hit our take profit. It's crazy. It was crazy. It's crazy. It's crazy. It's crazy. Okay, let's move on. This was crazy. I think this is even the reason why. This is the very reason why I decided. Earlier on, I was trading with. I was just opening trades, right? I mark my point of interest. When that point of interest is hit, and the market start now moving in the direction where I want it to move. That's when I used to open a position, and have my stop loss right above the high where I thought like the market will not go back to take it and ride the market. That was the time. Now I was kind of emotional. Like I was. This is now that when I feared so my tension is sweating over. And when I started using these order limits, I felt a bit relaxed. Right, that's it. Okay, let's move on. Let me just not continue so much on that issue. So there is also this guy here. There is a higher time frames. Higher time frames over lower time frames. With this, I want to illustrate with a very that here there's a chart for. This one is a chart for Euro USD on the 4-hour time frame. This one's downloaded on November 15th. This guy here, we see a bullish version of the standard trading model forming. Remember, we are on the 4-hour time frame, and again right here we are now on 30 minutes time frame. Still same chart. Now on the 30 minutes time frame right here. See, let's begin on the 30 minutes time frame. On the 30 minutes time frame, you can see the whole form of liquid that was swept. This rectangle here was here by a mistake. There was some liquidity swept over there. But again, you can also see some here manipulation a bit. The first break of structure that is very, very clear on the 30 minutes time frame. You can see all this small one, then we can smash him and hit our target. You can also on the bigger time frame, you can see this guy on 1 hour. This one was the one who was clear. Break of structure right here. We can take him. Still following this model. Scope of liquidity. First break of structure. This guy here. Take our profit here. So we are now just focused on the 30 minutes time frame. Break of structure. Then this guy was swept. Smash this target. Right? Then what next? Because this market was going up and we were coming down. Why were we expecting this of this market to reverse off from? Of course, on 30 minutes time frame, we would have expected something around over this leg, first break of structure, around this leg here. But what we see after this sweep of liquidity, this market has just been smashed, right? All this place has just been smashed, right? But remember, this lower low was not taken. So I'm just trying to just document to journal. Yeah, because I downloaded during that time. Just trying to stress on the point of normally spending most time on the higher time frames, right? And higher time frames being stronger, the liquidities on the higher time frames being stronger, uh, likely to be respected as compared to those liquidities on the lower time frames. Because right here we can see on 4-hour time frame, same chart that we just described. See, we need a sequence liquidity which we had with this rectangle here. First break of structure. This lower low, this way we're supposed to take our buy to target this and has. Right clear, you can see this is for the first leg. We move up. This right here, this mark here was on the 30 minutes time frame. The market structure shift for the market on the 30 minutes time frame. First leg on the 4-hour move here. Then the first break of structure clears right here. Where could we have set? Where are we supposed to set our buy order? Our buy order, this lower low right here. Ta-da. This flash here was the news. There was a release of some news. So it is very, very important for me, always, and for anyone who is in this industry, to spend a lot of time, 90% of time on the higher time frames, the weekly, daily, 4-hour, right? Because this guy, let's look at the 30 minutes. Because literally, if you were just focused on the 30 minutes time frame, then as we said, you would have set our order to drop down with the 15 minutes something, maybe get some fast break of structure, or we could have thought this one was just engineered liquidity, set our order around here, this place, and our stop loss right here. See the way it could have been blocked, right? It could have been taken out. And the market just rises down, goes for the higher time frames, goes for the higher time frames, first break of structure, lower low, and boom. This target was smashed. It was a release of some news. There was a flash, the market was here, flashed, boom, then we moved up there. That is it. That is it. Yeah. That was simple as that. Believe next time I'll even forget about this. I'll just come to this one of these videos and see where I came from. Right? Where I came from. Yeah. There's also this idea of quality trades, right? Yeah. So quality trades usually still reinforcing this idea of higher time frame. Quality trades, I think, higher time frames, setups, right? They don't have a high chance of printing out, right? The first break of structures, let's talk on the bullish version, right? This guy here on the higher time frame usually holds, and if it doesn't even hold, if it doesn't even hit our take profit, it usually gives us some pips. The least pips. I have found market reacting over this place before it takes this lower low is 10 pips, maybe on Euro USD, yeah, Euro USD 10 pips, but GBP USD gives you 15 plus pips, GBP JPY crazy one, even 20 pips plus, right, on this model. When this lower low is triggered, it gives you 15 pips before it goes down. That is it. So quality setups usually are likely to be on the higher time frames. Yeah, the 4-hour time frame. That is it. That is about our fear of execution. Yeah, and I believe slowly by slowly we'll get over all these fears of execution. We'll just be seeing our setup, opening positions, and just wait for those, say, stop loss or what, or check our partials or stop loss hit, and we move by. Yeah, because if people get 10 pips on EURUSD on this flash before our stop loss is hit, then without partials, 10 pips, okay, 10 pips with a good lot size. Lot size has really helped this traders. Leverage, yeah, leverage has really helped. So there are two kinds of traders. There's a trader who trades to catch many pips, right? Someone trades. Someone finds setups that will print him 100+ pips, right? They use just a smaller lot size. Maybe the highest is a standard lot. The highest is a standard lot, or two lots, and ride the market 100 pips. There are also those kind of traders who are just interested in very few pips, 10 pips minimum, 15 pips maximum. Okay, 10 pips, that's minimum. If the market moves, 20 pips maximum. 20 pips when they close their trade. 10 pips they close their trade. And what they usually do, they usually operate with high lot sizes, right? They don't take time on charts. It's like scalping, right? Just get in. After around 5 minutes or even a minute, because some if there is volatility, even a minute they are out. 10 pips banked. See, 10 pips with a lot size of 100 lots. Okay. 10 pips. I said, okay, I've been talking this so much on the previous videos. Yeah, I'm just stressing it up. Yeah, 10 pips with a lot 0.01, that's $1. 10 pips with a lot size of 0.1, that is $10. 10 pips with a standard lot, that's $100. 10 pips with what? I'm confused, man. $100, one standard lot. Okay, 10. Yeah. So with 100 lots, still 10 pips gives you $1,000. $1,000. It's 10 pips. That's a one minute move. And you're cool for the day. Yeah. So it's someone to find what they do best, what they usually like, or the activities they have on that day, with that day. So they're scalpers, they're swing traders, yeah. But me, I'm more of an intraday trader, scalper, not swing. I don't swing because I close my trades in the course of the day. I don't like trades that get to the next days, right? That is it. So thank you so much if you watched this video and you found some insight on it, and you would like me to drop more of this content. You can like the video, share it to your friends. Yeah, let's make money together in these markets as we grow together. And if you're new, you can always subscribe. We want the family to grow. or to our family to grow, because this is the only place I find someone to talk to. Yeah, I feel like there's someone who is listening to me. Yeah, that is it. When I get this space, someone might say I'm over talking, but it is what it is, right? I believe with all this, with all this talk, you can take one thing or two things. I don't think if you will miss something from this long conversation. But it's really good for myself. I'm also trying to train myself to be articulate, right? To be articulate, to talk for some time. I couldn't believe that I could make a video. I don't know how long is this. This is very long. It's very long, and I couldn't believe making the video that I made around 46 minutes. I didn't believe it was me, right? Because naturally, I just believed of myself to be someone who says two words, and we call it a day, we call it over. Yeah. I never trusted myself to communicate for such more than a long time. Yeah. That is it. I'm also trying to perfect this language, English, right? It is a new thing. So slowly by slowly, I'll get to that point. I get articulate, and I also feel have some people familiar with, growing with them. As I'm growing in this training industry, biggest space, right? So thank you so much, and I wish you a good trading day. It's a Thursday, yeah. So trade safely around the holidays. Thank you so much, and I'll see you in the next video. Bye.